Welcome to today's webinar, Trading the News Effectively. So it's good to see you all here today. It's another webinar in our Blue Sky Forex webinar series. And while we kick this webinar off and wait for last people to connect, let me just go through the risk disclaimer quickly, and then we're ready to continue. Just bear with me. Contents of this material are provided by third party, not Hot Forex, and are for informational purposes only and do not constitute investment advice. Hot Forex and Blue Sky Forex assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. Okay, so with this out of the way, let's just go through our agenda today quickly. First of all, I will quickly introduce myself. We'll take a look at two market types you will come across during your daily trading activities. We'll then look into the steps and how to trade the news effectively. And of course, at the very end, the dangers you should avoid in trading in overall, and of course related to news trading as well. Okay, and at the very end, you can ask your questions, so please write them down if you have any questions raising during the webinar, and then you can just ask them at the very end at the right time. So before we continue any further, can you just confirm in the chat or question section whether you can see the slide and hear me properly? Okay, perfect. Thank you very much for the confirmation. So let's go ahead. I am one of the senior traders here in Blue Sky Forex. We are an education, research, and trading group. We do teach various different strategies. We all do have our own trading habits and trading styles. I am myself really technical. I love my indicators. I love my own set of conditions and rules I strictly like to follow when making my trading decisions. And we do provide 24-hour trade support and analysis just to help all the retail FX traders to make better trading decisions. Okay. And Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. Okay, so let's take a look at two types of markets you will come across. One of them is price action, aka trending market, and it is casually more powerful. And the reason behind this is that in order to benefit from a proper trending movement, a significant trending movement, it needs to be fueled by significant news. Okay, so when there is a significant economic news released on the market or an event or some key person in a government said something interesting, and of course this can make the prices move significantly. So in order to be able to benefit from such a move, you will need to understand some fundamental aspects of the market. Without that, you can't really determine whether a certain trending move that you identify, if that is significant enough for you to benefit from it or not, whether it is tradable or not. Okay, so you need to have some degree of knowledge of the fundamental part of the market. Okay, so that makes it a bit more difficult to identify and to benefit from the trending or as high price action market. Okay, trend is your friend, as they say, and I'd say it is completely true. Now, the other market you will come across is mean reversion, aka ranging market. It is more common. It is easier to identify and it can be profitable. The reason it is easier to identify is because in a ranging market, the price is generally bouncing between the nearest support and resistance level. Okay, so if you know anything about support resistances, then you will already know how to draw your own support resistance levels onto the chart. And if the price starts lingering between those levels for a certain amount of time, then you will be able to say that the market is ranging. And of course, applying certain approaches or strategies, you can definitely benefit and trade the ranging market really successfully as well. Actually, a lot of traders do occasionally prefer trading on ranging markets than in trending markets. Now, regarding trading the news, if you are interested in trading the news, then you are aiming to trade with the price action and in a trending market. Okay, because the significant news, when it does hit the market, it makes the price trend significantly in a certain direction. And in order to benefit from it, you need to know what news are tradable. Okay. Essentially, you need to be able to identify a trending market. You'll need to be able to identify when a ranging market is turning into a trending market. And of course, you need to be able to estimate approximately how long the trending market will last. In other words, how significant the news have been and how far it will move the price. Okay. Right, now there are 4 things you need to keep in mind and to understand when you are going to trade the news. You need some planning. So you have to pre-plan before your trading session begins. What news events are you going to trade? Okay, there might be 1 or 2 news events on the market that have high impact. Some days there might not be any news events that have this high impact to actually make the market move. So in this scenario, if there are no news releases, then you just might need to take a different approach during that single trading session. But if you have analyzed the calendar for that day and you notice that there are some events upcoming that should potentially have a significant impact on the market, then make yourself some time before the news and of course after the news to actually get into the trade at the right time, analyze what the price is doing prior to the news, mark your support resistance levels onto the charts to see if the price is nearing any of those levels before the news hits, etc. Just be prepared before the news, and after you enter the trade, after the news has hit the market, then make some time to actually analyze the price and the price movement and your trade as well, just to make adjustments accordingly. Because if you are trading the news and if you are aiming for a relatively decent gains, then you might want to manage your stop loss levels and take profits perhaps. Okay. Then of course you need to understand again what major news you should be trading or taking a notice of during a single trading day, trading session. Then we'll take a look of one very simplistic and easy approach with Bollinger Bands, because Bollinger Bands usually do give you a relatively good indication when the price is consolidating before the news and when the price is breaking out from the Bollinger Bands, and when to enter the trade as well. Okay. And then we'll also talk briefly about trade calibration. So let's jump into those four points. It is important that you don't trade the news on the fly. And this correlates what I said with what I said before. Do some pre-planning, watch what news are tradable. And if you just open up your charts, open up the news calendar, you see that there has been some event marked in red in the calendar that you might want to trade, but the news has already passed like 15 minutes ago. You open up your chart, few seconds, you analyze it, and then make a trade. So this is like trading the news on the fly, and this doesn't really work. It's not only related to news trading, but with any trading, you have to still carry out significant analysis of the price in order to make appropriate trade decision. Okay, you just can't jump in and hope for the best, right? Because in this case, you are only gambling. All right. So please keep that in mind. Don't trade the news on the fly. It does require some significant pre-planning. Take some time before the news, maybe even an hour if that's what you need, to analyze where the price is at the moment, what the price is doing prior to the news, mark up your support resistance levels, etc. Okay. There's also an economic calendar available on the Hot Forex website, so you can feel free to use that one. There are also a lot of different third-party economic news calendars out there. There are composed and styled in different ways, so please just take a bit of time, analyze different ones, and find the one that suits you the best visually, that is most easiest to analyze. Okay. And the economic calendars, they are usually planned month in advance. So before a month starts, you will already know what are the events for the next month. So you can do significant pre-planning. You can mark down all the days you actually really want to be trading and spending more time analyzing the charts during the day where there is significant event happening and you want to trade that. And you would want to focus on the events that are marked down as a high impact news. Some of them have a star system, 1 to 5 stars. Then it has to have the 80% of the full amount of impact. So if you have a significancy of 5 stars maximum, then four stars has to be there definitely. Okay, so just as an example. So only the high impact news. You don't want to trade the medium or low impact news because these will be absorbed by the volume on the market. Okay, so they don't really make the prices move in a certain direction enough or not at all in order for you to benefit from them. Okay. So talking about the high impact news and the news that you should be maybe aiming to trade. First of all, obviously, is the central bank interest rate decisions. These usually have a major impact on a certain asset. Of course, European Central Bank has significant impact on euro, etc. Okay, so Bank of Japan has impact on the Japanese yen, and so on. Okay, so the interest rate decisions are definitely something to keep a high alert about. These are definitely events that are worth trading. The next one is a GDP, gross domestic product releases. This isn't really a release that we trade too much in our team. Then we have the consumer price index releases, CPIs. These are relatively mediumly trade in our team. Of course, then you have the job releases, more specifically non-farm payrolls in USA. These usually do have quite a significant impact on the asset. Parliament votes is something that can be a bit tricky as well, because it does require quite a good fundamental knowledge of the economics, and just to a very close observation, so to say. And last but not least, you have the consumer confidence data. I personally have never traded that myself, but still worth keeping an eye out for. What you can do in regards to those news releases, a lot of different calendars also have or do record and provide visibility of the past month's events. So you can go ahead and look up some of these events happening in the past and see how they have impacted the underlying asset. Okay, just to understand the impact of those news, the volatility of the price during those news times, so you get your head around better of what or how your trade would potentially look like. Okay, when to enter the trade, and perhaps when to exit the trade. And the more analysis you put into the past events and the price action around those events, the more information you gain for your own future trading of those events, right? You can mark down the average pip movements, what that certain event has caused in the past, and then you will already know the potential pip movements that the underlying asset makes around that news event in the future, right? So this is something that I would recommend you to do. So now let's just observe the simplistic approach with the Bollinger Bands and the price action, and what to analyze here, okay? So you can go ahead and open a 10-minute chart or a 15-minute chart, even a 1-hour chart if you are dealing with a news that is really significantly most likely impacting the market. But just for starters, you can start with a 10-minute or 15-minute chart. Please note that smaller time frame charts always include more noise. Higher time frame charts include less noise, okay? So what to do here? This is a Bollinger breakout strategy. And as mentioned in the, I think it was last week when we talked about these strategies. Now, Bollinger breakout strategy, in order for it to be properly tradable, requires news to be fueling the price movements, right? Now, how to analyze the trading opportunity is that you, first of all, you draw the Bollinger Bands onto the chart. The parameters for the Bollinger Bands is the period of 20 and deviation of 2. These are relatively standard parameters for the Bollinger Bands that are really, really widely used. And then you analyze the Bollinger Bands formation and, of course, the price or the candlestick formation and the movements, right? Now, here on this occasion, on this example, you see some quite big wicks on the candles and some quite high volatility. This large drop downwards, quick drop downwards, resulted in the Bollinger Bands going wider apart, right? So they are going wider here, as you can see. After the large drop, you see the price consolidating together into this point here, along with the Bollinger Bands constricting. Okay. So after this drop, you see price consolidation. You see indecision. You see some wicks forming again after this big red candle. The price is consolidating at this point. The movements go really, really small. And the Bollinger Bands constrict significantly based on what they were before. Maybe it's only like 20% of the width of what it was before here at this point, right? And as soon as this happens, the Bollinger Bands are really, really tight already. And then you see the price significantly moving outside the bonds, and as soon as the first candle closes outside of the bonds, you trade along with the direction of the candle movements, okay, in the direction of where it closed outside the bonds. And very often this kind of formation in the Bollinger Bands and in the price is caused by significant news, as the traders, they do tend to stay out of the market and they are waiting for the news release to hit, and then they will make and place their trades. Okay, so the first they will stay out, they want to know what is the information released along with the event, and as soon as that happens, they can make their trading decisions, right? So as soon as they are starting to trade, the price is starting to move, and as soon as the price or the one candle closes outside the bonds, on this occasion here it's really close. You can already essentially trade here, but this would be the official buy trade you would enter into. Okay, just trade along with the trend. So if it is fueled by news, a bollinger breakout is a really good strategy to trade. Okay, so quite straightforward. Now about chart calibration and what to keep in mind as well. In order for the market to simulate, it takes about 50 minutes after the news release hits the market. Okay, it's not really advised to hit or start trading immediately after the news hits the market, because you will see extreme volatility in the price. Okay, and it's still undecided in what direction the price will go quite often. Of course, depending on the news. Who will win, bulls or the bears? Okay, so if the significant news, the stats prove that the price will most likely and quite confidently move in a certain direction, you will still you can still be caught. Your trade can still hit the stop loss because of the extreme volatility right after the news has been released. Okay, so definitely keep yourself from trading 0 to 5 minutes after the news. It's better even to wait 15 minutes after the initial orders have been initiated and the price is starting to move in a certain direction confidently. Okay, it does take about 15 minutes. All right. And around that time, the candle will also close outside the Bollinger Bands more often than not. So then is the right time to trade it. Okay. If you are trading off a 10-minute or 15-minute chart, then your trade expiry or trade exit can be around 30 minutes up to 1 hour from your trade entry. If you see the price really heavily moving in the same direction and you're really confident that this will continue because news release justifies that, then it's fine if you jump into a longer term trade as well. But if you're a day trader, then 30 minutes to 1 hour is completely fine. Okay, at that time afterwards, the price already might see some exhaustion and indecision setting in. Okay. And in order to follow the formation that I showed on the previous chart, please do switch to candlestick charts if you are using any other type of chart right now. And of course, add Bollinger Bands. And again, the parameters for the Bollinger Bands is deviation of 2 and a period of 20. What I sometimes do, if I have identified more volatile market, then I will switch the period to 25 and the deviation to 2.5. Okay, but these are the maximum parameters that I'm going for. Anything above that, you will rarely see the price even lingering around the upper or lower Bollinger Band. So I want to keep it realistic, and this really suits me well. Okay. So a few dangers related to trading news, and of course in related to trading in overall, is please do not trust bots or robots or expert advisors or any systems that automatically trades in behalf of you or makes those trading decisions or manages your trade. Okay, a lot of them, if not most of them, are designed to generate losses on your account longer term. So please be extremely careful. If you decide to try out one, please do so on a demo account. Test this out for an extensive amount of time, 4, 5, 6 months, definitely, to see if they are consistently profitable, if they are raising your account balance consistently without any large drawdowns. Okay. If this is so, then you can consider setting that trading bot online to trade with a live account and live money, but still keep it safe and trade with low lot sizes. Okay. The second thing to keep in mind, and this is really important, some of the news events that are really statistics or numbers based, these may be followed by conferences. And during those conferences, some key people and politicians, they can make quite critical statements about those statistics that were released along with the news. And these kind of critical statements, they can really sway the price in the other direction. Okay, and this can happen in a blink of an eye. Trust me, this has happened before, and this will happen in the future. So it is really important to be mindful of any potential meetings or conferences held after that certain news release that you just recently traded. So indeed, keep that in mind, please. And when you are trading any of the major pairs like Euro USD, USD JPY, or the cable, then there might be conflicting events or conflicting data points between, let's say, Euro or USD when you are trading Euro USD. And these conflicting points or data sets can really generate a tug of war between the bulls and the bears on a certain asset. Okay, so you have to be open-minded. You have to analyze other events as well that are happening on the same and really close by to your news event that you are trading. Okay, because if there are any events happening on the same day close to your traded news event that include the other asset in the pair, it can really make the price ranging and not trending in a certain direction. Okay, so that makes you profit degrade to a certain degree. Okay, and last but not least, if the statistics released with the news, or if the numbers are too good to be true, if they seem too good to be true, or is an extreme large miss, okay, then it might be something off. Maybe the data or statistics was either gathered or broadcasted incorrectly. This has happened in the past. And in this scenario, there most likely will be adjustments made. There will be the key statistics will be reviewed and adjusted. Statistics will be released instead so they can change. So what happens with the price is that it might shoot in one direction significantly and really quickly at first, indicating a firm trend in this scenario. But after the adjustments have been made, it does recover really quickly, and if you jumped in a bit too late, then you will just be stopped out of your trade. Okay? It has happened in the past, and most likely it will happen in the future as well sometime. So please just keep an eye out for that, okay? Okay, that was short and sweet this time. Usually I tend to over-explain, but this time got away with this. So let me just open up the question section right now and see what we can find here, and I will provide my answer to those to the best of my abilities. 1 second. Okay, Alexandra is asking, you said you were a technical trader trading the news. Okay, it is a bit of a funny question. The thing is that, as explained before, we are a team of traders, right? We have our own technical traders, we have our own fundamental traders. So we are consistently communicating with each other and providing our own opinions about the market and what is really going on. So putting all this information together will help all of us approach the market, from the fundamental side and from the technical side. So no matter if I'm a technical trader, I am still able to trade the news. I can apply my own technical analysis, of course, and of course incorporate the fundamental analysis from my own colleagues and from my teammates in order to make a proper trading decisions. Okay. Muhammad is asking, is there Urdu language webinars? Sorry, to my mind, hot forex webinars are all in English language. I might be mistaken, but that's what I think it is, how I think it is. Okay, Camogelo is asking quite an interesting question. Is it true that when using either Thomson icon or the Bloomberg terminal, one gets an upper hand, meaning they will get the actual number seconds before the news hit the market, which gives them an edge as to which direction to trade at the exact moment for the extreme volatile scalpers? Okay, it's a really good question, and I'm just providing my own opinion of it because nobody really can factually say whether it's true or not, right? Only the insiders who actually manage the Bloomberg or that other terminal, okay? The thing is, whoever is gathering the data and the analytics from that certain event, they already will, I'm quite sure, share that information internally, and that information leaks out to big players and investors earlier than to us retail traders, and that I'm quite sure of. Okay, so the markets already start to move before we get the information. Now it is a race between the different terminals and portals who actually can broadcast the statistics and information first, because that results in more people coming to their website versus another website, right? So they're gaining more traffic to their website by releasing the data as soon as they can. There, of course, might be maybe seconds or minute difference between different portals when they release the data. I cannot really comment on which portal is the fastest to release the data. And I think, if it is a second game, I don't think it matters too much because this data is already completely known to all big players. They are not really actively observing the public Bloomberg terminal website to wait for the data. They are getting their data from different sources and they are already making their trades before we even know the numbers. Okay. So ultimately, you can use any portal, but if you want some second difference, then of course using most popular one of them would make sense. Okay, Alotson Boston is asking, what happens in the event during the event or news, and if there is a gap in the price? If I understood your question correctly, a gap in the price during the news, gaps usually depend on the actual brokers and where they get their price feed from. Okay, you might experience a gap with one broker, but might not see a gap with the other broker. Either way, you should simply treat the gap during the news as a simple price movement, and it doesn't really have any other significant meaning or effect to the future potential price movements during the event. Matthews is asking, will you be providing us with these notes at the end of the session? Sorry, Matthews, I am not allowed to share the actual presentation or the documentation here. However, what you can do is check in the past webinar section on the Hot Forex website. We do have a recording of the same topic up there, I'm quite sure. And you can take your own note and review that webinar as many times as needed. For us is asking, can we use leverage when trading news? It doesn't matter if you're trading news or if you're trading any other, if you have any other style of trading. Trading with leverage still always boils down to one point. The lower the leverage, the safer, right? The best and most professional traders, they don't use any leverage at all. But us retail traders, we often don't have the enough capital available to earn such high profits to uh, live from trading from month to month and be really, really stable and be able to put something aside for maybe buy a house in the future, right? So we still end up using a certain degree of leverage. I would say try to keep it below 1 to 30. Or 1 to 50 is complete maximum, I would say, to use. But use as little leverage as possible, and the leverage that would make sense to you and your capital. Okay, but it doesn't have any difference if you're trading news or any other way. Okay, I'm getting information that there actually are Urdu webinars available at Hot Forex. So Muhammad, if you need to look into those, then you would need to look into that. Okay, Musa is asking about the Bollinger Band's parameters once again. Sure, the standard Bollinger Band parameters that are really widespread and quite might be even the default ones in MetaTrader 4 terminal is the period of 20, and the deviation of 2. Okay, so these are the standard ones. If you experience a really, really volatile market, then you can raise the period to 25 and the deviation to 2.5. Okay. David is saying, I use the Hot Forex economic calendar. What is the delay for hot forex for posting these figures on the economic calendar? Is it manually done by hot forex? I wish I could answer this question, David, but I do not have the information about that. What you can do, you can write an email to them and asking this question and send it to webinars@hotforex.com. I'm quite sure they'll give you an answer about that. Okay, Kamagella is asking, does hot forex offer low spreads when trading the news events exactly when the news are released? Because I have so many problems with brokers upping their spreads massively when the news are released. So my trades would go with low or no profits, even though my trades went in the correct direction. Now, it is relatively common for the brokers to indeed increase the spread during the high volatility news. It is not uncommon practice. And I believe that to a certain degree, hot forex also introduces a bit wider spreads during the news. But I can't really provide you with the exact figures. You would need to ask from hot forex directly, what are the spreads during high impact news? Most likely it is defined by a certain algorithm that observes the price, but that's really up for them to explain. Okay, Netson is asking, what is the effect of the standard deviation of 2.5 with a period of 20 on the Bollinger Bands? There is really no certain effect or a side effect when you use this combination. It really comes down to your personal preference and how you view the market condition to be. If it is extremely volatile, then you can simply, move the period from 20 to 25, or just move the deviation from 2 to 2.5. But I usually, do both, right? I modify the standard deviation. I also modify the period if I have identified an extremely volatile market. So you can try it out different combinations. It's really up to you. There is no certain benefit by any certain combination of these parameters. Okay, Kamagelo is asking, if central bank interest rate releases are of high volatility, then why is it that the European Central Bank rate decisions did not produce that much volatility today, although it is a high impact news? This can be the reason depending on what are the expected value of the statistic that is measured or discussed upon, and what is the real statistic that is actually at the very end gathered, if you know what I mean. So there are speculations what the new rate will be. If the new rate is the same that it was previously, and it actually is the same, then this kind of event will obviously not cause much movements on the market. Okay. Now, if the interest rate is speculated to significantly rise, and it doesn't, no, it will have an effect on the market. And if the interest rate is speculated to remain the same, but it actually does increase or decrease for that matter, then it also does have an effect on the price movements. But if the actual numbers meet the speculative numbers, then there might be an impact, but there might not really be an impact. Okay, so that already completely depends on the approach the major players take, whether they are actually, what are their decisions related to the news release, right? It really boils down to that, because they are moving the markets. David, if you're looking for additional webinars more related to news, I think there are also other presenters on Hot Forex, and they also discuss live market analysis along with the economic or fundamental analysis as well. So you might want to check in the past webinar section. Perhaps you find something interesting there. Okay, last call for questions. Okay, as I don't see any other questions coming in at the moment, then thank you very much to everybody who attended this webinar today. It was my pleasure to be the host for this topic. And we'll see you next week with a new topic about Trump, Donald Trump, the US president, and the effect he has on the US dollar. Something really unexpected, a bit out of the ordinary, but we'll see how it goes, and then definitely I'll be glad to discuss this topic with you later on as well. Okay, so see you next week. Take care, stay safe, and have a good day.